Welcome back to Investing Hawk Podcast. Today, we're tackling a question that seems to be on a lot of people's minds lately. Is Grab a good time to buy now? We've gathered a whole stack of sources, financials, analyst takes, market data to really unpack what's going on with this Southeast Asian tech giant.
Yeah.
If you like what you hear today, please do subscribe, like, and comment. It really helps us out. And hey, if there's a specific company you want us to look into, just drop it in the comments below.
Yeah, it's a really important question. Southeast Asia's tech scene is just so dynamic, and Grab is, well, it's right at the center of it. We'll be looking at, the fundamentals, how the stock's been doing recently, what might be coming down the pipeline, and of course, the risks. Can't forget those. Our goal is really to give you the key insights so you can understand all the different angles on Grab's investment profile right now.
Okay, let's get into it then. Starting with the basics, the fundamentals. We know Grab, right? Market leader, ride-hailing, food delivery, 8 countries across Southeast Asia, that whole super app model. But how's that actually translating financially? How are they performing?
Right, the super app thing is key. It's not just a buzzword. It creates this kind of ecosystem where using one service pulls you into others. Rides lead to food. Food leads to payments. It builds stickiness, makes it harder for competitors. You have to replicate the whole thing, not just one part. Financially, if we look at their last full year, that's the FY 2024 annual report, filed back in Feb 2025, revenue was $2.82 billion for 2024. Solid double-digit growth, which is good.
The profitability, that's always been the question mark, hasn't it?
Exactly. They still posted a net loss for 2024, $640 million. But here's the interesting part. While it's still a loss, it's actually shrinking. It's getting smaller compared to the year before. That suggests they're moving towards break even, maybe focusing more on efficiency alongside that growth.
Okay, narrowing losses. That's definitely a positive signal. And are we seeing that continue into this year, into 2025?
Yes, absolutely. The trend looks like it's holding. For Q2 2025, those results just came out. July 31st, revenue hit $785 million.
$785 million. How does that compare?
That's up 18% from Q2 last year, which was $665 million. So growth is still there. And their gross profit margin in Q2 was around 52%. That's pretty healthy for this kind of business. It shows they're making decent money on each transaction before other costs.
52%, okay. And the bottom line, the net loss.
Crucially, that improved quite a bit. It came in at $98 million.
$98 million loss compared
to $135 million in Q2 of 2024. So definite steady progress there. And management guidance, plus what analysts are projecting, suggests Grab could get close to EBITDA break-even, maybe late 2025. Adjusted EBITDA might even turn positive for the full year 2026.
Right. EBITDA being earnings before interest, taxes, depreciation, and amortization. It's a key measure of that core operating performance. So getting close there is significant. But what about their overall financial health? You need cash to keep growing while you're still losing money overall. How's their balance sheet look?
That's a really good point, and it's one of their strengths, actually.
Yeah.
As of the end of June 2025, they had $4.1 billion in cash and equivalents.
$4.1 billion, okay.
And their total gross debt was about $2.2 billion. So doing the math, that leaves them with a net cash position of $1.9 billion.
Nice cushion.
Exactly. It's a buffer. Now, their free cash flow over the last year is still negative. They are still burning some cash, but even that's improving. The cash outflow from operations in Q2 was down to $45 million. A year ago, it was $110 million.
Big difference.
Yeah. So that strong balance sheet gives them runway, gives them options while they push towards profitability, sets them apart from maybe some others who are tighter on cash.
Okay, so solid finances underpinning the growth story. But how are they doing against the competition? Southeast Asia is famously competitive.
Oh, absolutely. They are still the clear leader in ride-hailing and food delivery in the region. Main rivals are Gojek, which is now part of GoTo, and then various, local players in specific countries. Grab's advantages. That huge user base, over 180 million downloads, the super app integration we talked about, and they've spent years building relationships with regulators in each country. That's hard to replicate.
That regulatory piece is often overlooked, isn't it?
It really is. But the flip side of that aggressive expansion in the super app model is the pressure on profits. They still use subsidies sometimes to keep market share, and the take rates, the cut they get from each ride or order, are often thin because of that intense competition. It's a balancing act.
A constant balancing act. Okay, that gives us a good picture of the fundamentals. Let's shift gears now to the technicals. What's the chart telling us? Is the market buying into this improvement story?
Well, looking at the recent price action, it seems like it. As of September 12th, Friday's close, Grab was at $6. and it was up 8.5% just on that day alone.
Wow, big move.
Yeah. And over the last 3 months, the stocks generally traded between about $4.50 and $6.50. So that recent pop definitely signals some short-term bullish momentum. Investors seem to be reacting positively.
Are there specific price levels you're watching, areas of support or resistance?
Yes, definitely. On the downside, we're seeing key support forming between roughly $5.10 and $5.30. That's where buyers have tended to step in before. On the upside, resistance looks like it's around the $6.36 to 50 cents area. That's where previous rallies have stalled out.
So it's bumping up against that resistance now.
Getting close. What's also interesting is the trading range tightened up a bit since August, and we've seen higher volume on the days the stock moves up. Sometimes that can suggest accumulation for more bigger investors building positions, more conviction behind the move.
And what about the technical indicators? Do they back up this positive view?
Largely, yes. The 50-day moving average is at $5.38 and the 200 days at $5.65. The price being above both is generally seen as a positive technical signal.
Right.
The RSI, the Relative Strength Index, is around 65. It's getting up there near 70, which is considered overbought, but it's not extreme yet. Doesn't necessarily mean a reversal is imminent. And the MACD indicator, another momentum tool, recently crossed above 0. That also tends to support a short-term uptrend.
Okay, volatility.
It's been moderate, the average daily move about 4%, but yeah, it definitely spikes around earnings reports. That's pretty typical for these kinds of growth stocks.
Makes sense. Okay, so technicals look constructive. Let's talk news and sentiment. This is where it often gets really interesting. What's driving the buzz around Grab lately?
Well, a huge driver was those Q2 results we talked about, beating expectations on both revenue and the loss figure. That got attention. After that, most of the big bank analysts, Morgan Stanley, Citi, folks like that, they came out and reiterated overweight ratings.
Meaning they expected to outperform the market.
Exactly. They're pointing to the better cost control, the guidance towards profitability. Their price targets are mostly in the, let's say, $6.50 to $7.50 range. So suggesting more upside.
Okay, so generally positive from the big banks. But is it unanimous? Anyone sounding a note of caution?
Not completely unanimous, no. We did see at least one analyst downgraded the stocks to neutral. Their concerns were centered on, the ongoing competition and the fact that profitability isn't here yet.
Right, the perennial balancing act. Growth versus profit.
Precisely. And it highlights that core question for investors. How much do you weigh the future potential against the current lack of profit? Different people come down on different sides of that.
Fair enough. What about insider activity? Are the people running the company buying or selling?
That's always worth looking at. And we have seen some significant insider selling recently filed under Form 144.
Form 144, that's the notice insiders file when they plan to sell shares, right?
Oh, correct. It signals a planned sale. For instance, Chin Yanong sold about 100,000 shares back in June. And Anthony Tan, the CEO, he had a scheduled sale of 750,000 shares, also in June. In fact, there's been a pattern of these program sales from Anthony Tan over the last few months, about 600,000 shares total.
Programmatic selling. So it's likely pre-planned, not necessarily a reaction to bad news.
That's the important distinction, yes. It often suggests planning for diversification or liquidity needs rather than, say, a panic sell because they think the stock is about to tank. But, heavy selling is still something the market notices.
Sure. Any read on general social media sentiment?
Reports suggest it turned more positive after the good earnings report. And searches for terms like super app have apparently been ticking up, maybe indicating more public interest.
Okay, interesting mix there. Positive analyst views, but some caution, and planned insider selling. Let's look ahead now. What catalysts are on the horizon that could move the needle for Grab? Short term first.
Short term, all eyes are really on the Q3 results. They should be out sometime in November. People will be looking for confirmation that the positive trends are continuing, better margins, smaller losses. That's key. Management also hinted about maybe some new fintech integrations coming in the second half of this year. Could be interesting if they expand GrabPay's capabilities further.
Okay. And longer term, what are the bigger potential drivers?
Longer term, you've got the continued growth of digital payments across Southeast Asia. GrabPay and their digibank are really well positioned there. Plus, just the overall rise of e-commerce in the region helps their delivery business. There's also always chatter about potential M&A, maybe consolidating with other fintechs or digital banks. Nothing concrete, just speculation for now. And then there's regulation. Changes of rules around gig workers or ride-hailing could cut both ways, risk or opportunity. It's a very fragmented landscape.
And you mentioned something earlier. Didn't they just make a big move related to autonomous vehicles? That sounds potentially massive.
Yes, that's a huge one, potentially. Just this month, September 2025, Grab announced a major investment in WeRide. They're a big player in autonomous driving tech. The plan is to start rolling out Level 4 robotaxis and shuttles in Southeast Asia.
Level 4, meaning fully self-driving in certain areas.
Exactly. Under specific conditions, no human driver needed. This is a serious push into self-driving. Think about the long-term implications if they can significantly reduce driver costs. It could completely change their economics.
Game changer potential for sure.
Definitely. There's even some buzz about them trying to deploy these faster than originally planned. Plus, other rumors expanding the super app further into lending, maybe even getting included in the Nasdaq Q100 index down the line.
Inclusion in a major index like the Nasdaq Q100 would bring in a lot of automatic buying from index funds, right?
Precisely. It forces passive funds to buy the stock, which
Yeah.
can be a significant boost. So yeah, lots of potential catalysts to watch.
Definitely a lot to keep track of. But we have to talk about the risks, too. No investment is risk-free. What are the main ones for Grab specifically?
Top of the list has to be the fact they aren't profitable yet on a net basis. There's always the risk of profitless prosperity, growing users, but struggling to actually make money from them. Competition, as we've said, remains intense. GoTo, Shopee entering food delivery, local startups. They constantly have to fight for market share, often using subsidies. And regulatory risk is always there. Different rules in different countries, especially around gig worker rights and licensing. A bad ruling in a major market could really hurt.
Okay, those are company-specific. What about broader market or economic risks?
Well, Grab's fortunes are tied to Southeast Asia's economy. If regional growth slows down unexpectedly, that would hit demand for their services. Foreign exchange is another one. If local currencies weaken against the US dollar, their reported earnings take a hit when converted back. And the tech sector itself carries risk. Grab is what we call a high beta stock.
Meaning it tends to move more sharply than the overall market.
Exactly. If there's a general market sell-off, or if investors suddenly sour on growth stocks and rotate into safer value stocks, Grab could get hit harder than average.
Right, lots of moving parts. So bringing it all together, what's the verdict? You mentioned a rating.
Yeah, weighing everything up, the good and the bad we'd give. Grab an overall rating of 6 out of 10 right now. The strengths are clear. Market leadership in a growing region, that strong balance sheet, proven revenue growth, the improving path to profitability, and the positive technical picture recently.
And the weakness is pulling that score down from, say, an 8 or 9.
It's the fact they're still losing money overall, the ongoing insider selling, even if planned, the constant competitive pressure from subsidies, and those regulatory uncertainties. Plus the valuation, based on future sales estimates, it does look a bit high compared to some global peers. Their dominance justifies some premium, but not unlimited.
So what does that 610 mean for different types of investors? Short-term traders versus long-term holders?
For short-term trading, the momentum after earnings is positive, which is good, but it's nearing resistance levels, and there's that insider selling overhang. So maybe some potential, but with caution needed. Moderate risk of a pullback.
Okay. And for someone looking longer term, someone investing in the Southeast Asia digital story?
For the long-term investor, Grab looks pretty attractive if you have a higher tolerance for risk. You have to be comfortable with the ongoing losses for now, the competition, the regulatory stuff. But the Q2 results were strong, the move into AVs is bold and strategic, and sentiment seems to be improving. They're positioned for leadership. But, and it's a big but, they have to deliver on things like the autonomous vehicle plans, and they need continued buy-in from big institutional investors. Those are the swing factors.
A lot to weigh there. It really feels like Grab is at an interesting crossroads. What's one final thought for our listeners to chew on as they consider this company?
I think the really interesting question this raises is broader. As these big tech companies, like Grab, push into really expensive advanced areas like self-driving cars,
Yeah.
how long will investors keep funding those big bets while the companies are still losing money? Even with a strong balance sheet and market leadership, there's a limit, right? It really captures that tension between investing for massive future growth versus demanding profitability sooner rather than later. That's the debate Grab is right in the middle of.
A crucial tension indeed. Well, thank you for walking us through all that, and thank you for joining us on Investing Talk podcast. Just a reminder, this conversation isn't investment advice. All the data we discussed was as of September 15th, 2025. Please do subscribe if you haven't already, and leave us that comment if there's another company you'd like us to analyze. We'll see you next time.